With so many different credit options, our modern civilization makes it quite simple to spend more money than we have. Many of us are guilty of having a champagne taste on a beer budget. And because new technology, designer clothes, and automobiles are always being introduced to the market, we're consistently enticed to shop for the most recent and cutting-edge models available. No surprise that American households average over $5,000 in credit card debt. So, what are some of the tips you can use to live below your means? And why you should even live below your means? Well, let's get started. 1. Create a budget. Putting down a budget is one of the most important actions you can take to come out from under the cycle of living paycheck to paycheck. If you don't have a good hold on your money and the flow of income and outgoing costs, you risk becoming stuck in a never-ending cycle of debt, which can be avoided by having clear financial control. Create a budget by determining your income and where your money is going. If you do this, you will be able to tell whether you are living within your means or whether you are living beyond your means. When estimating how much money you bring in monthly, it is important to consider not just your regular income, but also any additional sources of revenue you may have. Some instances of these include gifts, child support payments, your tax refund, or money earned from other jobs or gigs. To determine how much money you make each month, subtract all your monthly expenses from your total earnings. If there is any money left over, that's fantastic. You're making do with the resources at your disposal. 2. Track your spending. After creating a budget, you should consider how you will keep track of your spending to ensure that you do not put yourself in jeopardy of straying from your intended path. Maintaining an accurate record of your spending can be accomplished by utilizing a spreadsheet or any of the numerous budgeting tools available for mobile devices. You will be more likely to reevaluate your choices if you record every purchase you make. If you do this, you will eliminate the need to go out and get that cup of coffee that costs $5 when you already have some at home that is ready to boil. 3. Don't rely on credit cards. Credit cards are an excellent financial tool because they enable consumers to make significant purchases and stretch the cost of those purchases out over a long period than is possible with cash. And well, surprisingly, 65% of American households have outstanding debt associated with their credit cards. These surprising numbers illustrate how appealing it may be to have a credit card in your possession. To prevent the temptation to spend more than you can afford, limit yourself to using no more than 1 or 2 credit cards. Then, you should only have a credit card utilization rate of less than 30%. This suggests that if your credit card has a maximum of $10,000, you should spend no more than $3,000 or less to be within the suggested credit card use percentage. 4. Reduce meaningless spending. Americans are huge spenders. In fact, the most recent expenditures report that the Bureau of Labor Statistics compiled for the year 2021 revealed that they spend more than 80% of their total yearly income. If you want to learn how to live within your means, the good news is that you can minimize your expenditure in some of these categories. When you track your purchases, you should always ask yourself, do I really need this? After giving some thought to each purchase you've made, you might be able to get a clearer picture of your top priorities and the things you really want to acquire. Spending less than you make each month will increase your chances of becoming debt-free, paying down existing debt, and building up funds for future significant purchases. 5. Save from the start. Before your income tempts you, transfer money to your savings account, 401k or Roth IRA. When you get paid every week or two, money may automatically be sent to various accounts protecting you from overspending. This is because most banks and jobs allow you for automated transfers. And the good news is nearly every financial institution offers clients the option of setting up automatic transfers between their checking and savings accounts. You have complete control over when and how much money is transferred and where it goes. You might even set up your direct deposit so that a certain amount of money from each paycheck goes into a savings account. The advantage of this is that you do not need to think about it, and as a result, you're less likely to spend money on something else. 6. Negotiate rates and bills. There is a widespread misconception among customers that prices that financial institutions like banks and credit unions charge for their services are set in stone. However, if you know how to negotiate with credit card issuers, you might be able to save a significant amount of money. This is because credit card issuers and other financial institutions want to keep you as a customer. Suppose you want to minimize the amount you must pay monthly for your credit card bill. In that case, you should talk to your credit card issuer about whether you are eligible for a longer-term repayment plan, a reduced annual fee, or a lower interest rate. In some cases, all it takes to secure a better deal is to let your credit card company know that you've found a company that occasionally offers lower interest rates. Try it out. 7. Pick up a second form of income. If living within your means is something you generally want to accomplish, finding a second source of income might be helpful in assisting you in doing so. If you already have work that requires you to be there from 9 to 5, picking up a second shift without becoming overwhelmed may be difficult. To our good fortune, the gig economy is thriving, and as a result, there are many options to generate money from your passions and pastimes. For instance, do you have a fantastic automobile, and are you a fan of the open road? There may be opportunities for new drivers in your area to work for ride-sharing companies like Uber and Lyft, as well as other companies. Or have you ever fantasized about being able to make a living as a barista? If you have a lot of free time on Sunday mornings, you might put into good use by working as a barista in a coffee shop in your area. You can also sell your skills by using any of the dozens of freelancing programs that are now available. 8. Downsize your home. Simply considering moving out of the place you've come to think of as your own might bring up a wide range of emotions. If you buy the most expensive house that the bank believes you can afford, you may discover that it is challenging to keep up with the payments for your mortgage, insurance, and any necessary maintenance on the property. You might want to consider purchasing a fixer-upper instead, as these properties are typically more affordable and require only a few simple and inexpensive renovations. Given the current income ratio to housing cost, moving into a smaller home may be the best option for improving one's financial situation. Even if the thought of having a guest dining room fills you with joy, if the reality is that you only use it a few times each year, it may be in your best interest to sell your property and find a cheaper place to live. 9. Build an emergency fund. If you don't have money saved up to pay for an unexpected cost, you're basically living above your means. This is because of the unpredictability of crises, which can be relied upon to take place at some point. Therefore, if anything unforeseen occurred, such as a flat tire or broken dishwasher, you would undoubtedly be required to pay for it with money you do not now possess. If unanticipated expenses happen, having a savings account that is specifically earmarked for emergencies might help you avoid accruing further debt and enabling you to live within your means. It is recommended that you attempt to save enough money to cover 3 to 6 months' worth of expenses, but it may take some time to get there. So, set aside $1,000 in weeks or months. Thanks to this, you'll have some room to breathe, and it will cover some minor emergencies. The next step is to adjust your spending, so you have room in your budget to set aside money for monthly savings. 10. Plan big purchases. When you are trying to build up your savings, the absolute last thing you should consider doing is going into debt to pay for a large purchase. This does not mean you will never be able to purchase a car of a more recent model or a television with a larger screen, simply pointing up the need to plan ahead. If your automobile has more than 100,000 miles on it, you should consider whether you need to replace it within the next year or two. You can avoid acquiring an auto loan if you don't wait until your car breaks down. You should immediately include a fund for a car purchase in your budget and start contributing to it regularly. After that, you may make that significant purchase with cash instead of a credit card when the moment is right. You are in command of the situation when you have cash on hand. Because you are paying the total amount due, you can negotiate with a car dealer or buy a used vehicle from a private party. Putting money aside for large purchases brings the whole cost down. If you put $5,000 away for a home improvement project, you will have a better chance of making selections that will keep the total cost within your financial constraints. You may avoid going into debt and live within your means by creating a budget for significant purchases of at least 6 months in advance and making every effort to make the costs as low as possible. So what do you think about these tips? And well, which one will you be trying out? Comment down below. That is all, and remember to hit the like button and subscribe. See you in the next video.